When a taxpayer receives wages or salary from a business at the end of the year, he or she will receive a W-2 from an employer. This is the main and sometimes the only item that your clients will bring to you in order to complete their return. In your workbook, there's an exhaustive list providing a description of each of the different boxes in the W-2 with instructions of what to do with that information. I want to touch upon a few of the boxes that contain information more frequently than the others. You will notice in the W-2 is the employee's Social Security number. Hopefully that number matches the number that they provided during the initial interview. If not, you need to find out which is the correct one. Unfortunately, often it's the W-2 that's wrong, and you'll need to send it back to the employer to have it corrected. Boxes E and F include their name and address. Box 1 is wages, tips, and other compensation. Box 2 is the federal tax withheld. Box 3 is the Social Security wages. In many cases, the Social Security wages will not be the same as the gross wages in Box 1. For instance, if their income is high enough, their Social Security wages will max out because they only pay Social Security taxes up to a certain amount. Also, some pre-tax savings accounts, such as a 401k, are not included in wages and tips, but will be added to the Social Security wages. Medicare tips and wages are normally in Box 5. Since Medicare does not max out, this amount may be higher than the Social Security wages in Box 3. Box 6 shows the total of Medicare tax withheld, including the 0.9% surtax mandated under the Affordable Care Act for taxpayers with incomes over $200,000. Box 7 provides Social Security tips, and Box 8 is allocated tips. Although important, boxes 9 through 11 are rarely used, so refer to the book if you find an amount in any of these boxes. The next area to pay special attention to is Box 12. All kinds of codes are reported here. A list of codes found in Box 12 is in your book. The most common will be C and D. C is the excess premium paid by the employee for insurance and group term insurance in excess of $50,000 of death benefit. D is normally what is deducted for an employee's 401k. Today, many employees are eligible to participate in 401k plans. If the taxpayer is participating, the amount they contributed will be in that box. Another comparatively new development regarding Box 12 is reporting the dollar amount of employer-provided health insurance coverage indicated by code DD. This is one of many new provisions required under the Affordable Care Act and indicates that the amount is not taxable. Then down toward the bottom of the W-2 form in boxes 15 through 20, you will find state and local taxes and tax numbers used on the client's state tax return, if any. In addition, you will use that information to get the state tax amount to put on Schedule A if you itemize the client's return. As a tax preparer, you may on occasion find an error on a W-2, in which case you'll want to advise the employee to have the employer change it. For instance, recently an associate had a client come in with a W-2 that had a check mark in the statutory employee box. The preparer noted that the W-2 was from the same employer as the previous year. However, the box hadn't been checked that year. When the preparer asked the client if anything had changed in the job relationship, the client said no. So the preparer encouraged the client to speak with his employer about the apparent error. It turned out that the payroll clerk had checked the wrong box. She had meant to check the box showing that the client was participating in a company retirement plan. So they prepared a corrected W-2 and the preparer completed the return. Gratefully, errors on W-2s are rare, and failure to catch them won't typically reflect poorly on the preparer. When a taxpayer has only one employer, you'll simply transfer the amounts from the W-2 to the 1040. If a taxpayer worked for more than one employer or is married filing jointly, also known as MFJ, and both spouses worked, you'll need to add up the wages from all of the W-2s and place it on the appropriate 1040 form. Tax preparer software today makes this a very simple process. All of the software I am familiar with has a W-2 input tool. The input screen will either appear looking like a standard W-2 and you input the numbers into the blocks as they are on the form, or there will be a list of block numbers and you type the amounts beside the corresponding number. The software then knows where to insert the numbers on the tax return. As the W-2 holds a lot of information about a taxpayer's earnings and withholdings, this input tool covers a lot of bases and takes the guesswork out of how to record each item found on the W-2. If you plan to submit the return on paper, you will need to attach one of the W-2 copies, so don't do the return without having these in your hands. If you plan to file it electronically, you won't have to submit the W-2s, but to ensure the return is right, you should still retain a copy of each W-2 to work from and keep in your file. So, will every taxpayer have a W-2? No. As I mentioned a moment ago, only 6 out of 7 returns will have wages and salaries. Other taxpayers may not have worked during the year, or they may have been self-employed and will report their income as business income. In some cases, you may find that a taxpayer receives a 1099 MISC from his or her employer, which shows non-employee compensation. If the taxpayer feels that the income should be employee wages and not non-employee compensation, then they may wish to take it back to the employer and have them issue the taxpayer a W-2. If the employer disagrees and refuses to change it, the taxpayer will still need to report the income either as wages or as business income. If they feel strongly that it should be wages, then you will fill in Form 8919. On it, they will pay their share of the Social Security Medicare taxes. The IRS will bill the employer for the other half of the Social Security and Medicare taxes, plus penalties for underreporting. The employer will have an opportunity to protest, and if the IRS agrees with the employer, they may require the taxpayer to account for the missing Social Security and Medicare taxes. To keep it simple, in most cases, the client will choose to treat it as business income, which I'll address later.